So welcome everyone. My name is Blessy Thomas. I am going to just kick off with just a little bit of an overview of the MBE Equity Multiplier Project, give you a sense for what these services are, and then we'll jump right into our topic for today. So please do share any questions you have in the chat as we go along, okay? So for those of you who are not familiar, MBE Equity Multiplier Project is an award through MBDA with a focus on overall the goal being to help MBEs prepare to access equity financing, so equity capital. And once you are prepared, really connecting you to equity investors, relevant equity investors. That is the ultimate goal here. We want to better connect you to the VC and PE ecosystem, which is not always naturally available based on just kind of the context and history of where we've had those connection points in the past. So that is why we are here. We have kind of two different paths or kind of two different lanes of ways that you can engage depending on where you are in your journey. One is if you are very new to equity financing and very new to this whole world, looking to learn the baseline basics, the terminologies, the process, what to be aware of. Really, the optimal options for you is to engage with the workshops and start to utilize some of the tools we're sharing with you. And then don't hesitate to reach out to me, and I'll provide the email address where you can reach out to me with additional questions and specifics that you're trying to navigate. For those of you who are actively looking for equity financing, meaning that you are pretty, you have concluded that you need to have equity as part of your capital stack, or that you have developed an investment package and are starting your journey of trying to find investors, or if you're actively kind of meeting with investors today and looking to expand the potential investor network to kind of have more of a diversity in terms of options of investors. Really, we have some one-on-one services for you to really engage with. And what will happen is if you complete our intake form, we will have a consultant reach out to you to kind of get a good sense of your baseline starting point, work with you on your package, vetting it at a baseline level. And then the next stage would be to work with a financial analyst who will dive in more into the details of your financials, whether it be projections, revenue models, valuation. And then lastly, you will be working with, once all of that is complete, you'll be working with our investment readiness coach, which actually is our presenter for today, Sarah Kim. So you will get to know her a little bit better during this call. So that is the one-on-one services we have available. And these are individuals with a lot of exposure to either the VC or PE space, or really understands the financial space and really looking at the financials of businesses. So really recommend you taking advantage of those services. It is free for you as a minority entrepreneur. It is and available to entrepreneurs across the US, minority entrepreneurs across the US. So again, emphasize if you know counterparts across the US who would benefit from these types of services, please let them know about it and share the information, okay? So with that, I am actually going to switch over to introducing our presenter today, Sarah Kim. I'm actually going to let Sarah kind of dive into her background, but I'll just give you a high-level overview. Sarah's actually worked with TEC, the Enterprise Center, quite a bit in terms of various initiatives around kind of the equity-related topic. So I won't go into all the weeds of that, but what you should know is that she has worked closely with several of our minority businesses that are TEC clients and have received great feedback on the engagement and support and the valuable advice that she's given them. So really, because she comes highly recommended from just our even existing base of clients. So Sarah is a partner at SKH Capital and has an extensive amount of private equity experience, and she'll kind of go into that. But before heading off on our own, she was at Halyard Capital before that. So Sarah, I'm actually going to just hand it off to you. I think it's always good to hear your story directly. Thank you so much for joining us and sharing this information. And just as a quick FYI, before I hand it off to you, please, for everyone on the call, This is meant to be an interactive conversation. Sarah loves interactive conversation, but that's the purpose of these workshops. So please put your questions in the chat and we'll decide if we need to come off of mute for any of those questions. But it's best to kind of keep a dialogue going and make sure you ask all the questions that you want to get addressed on this call, okay? Thanks,
Great.
Sarah.
Thank you. Thanks, Bessie. My name is Sarah Kim. It's great to meet you all. And Happy New Year. I hope you're off to a great start to 2022. This is really meant to address and help you. Hopefully, I'm just really delighted to this opportunity to share my experience and background and insights so I can hopefully help you constructing a message that summarizes and articulates what you've done, how you did it, and what achievements you made to be where the business is today, and what is to be expected growth opportunities, and concisely in the deck. So, and as Blessy explained, my background is I started my career on Wall Street out of school long years ago. And those couple years of analyst program that really focused on training me to learn how to assess business and markets from an investor's perspective. So I spent earlier part of my career at BMO Capital Markets in New York City based firm as a managing director. There actually I provided and structured debt capital to fast growing middle market companies. And after that, I transitioned into and spent over a decade at a private equity firm called Hallier Capital, also based in New York City. And there, this fund focused on high growth companies, providing growth equity, and as well as invest via buyout. So I'll explain that distinction quickly in the next slide. So on the more personal level, I have always been very passionate about helping emerging minority and women-owned businesses. So I've been really spending a lot of time outside of my professional time to really follow that passion. So I'm currently on a committee, a steering committee of an organization called WAVE, stands for Women's Association of Venture and Equity. So that's a little bit of my background. So why don't we just dive into the next slide will be agenda, but we don't have to follow this agenda. And as Blessy has indicated, I want this to be sort of very interactive format so that we can sort of, talk about your thoughts while I speak, and you can pause them anytime you want. Blessy, you want to go into the agenda? I know, unfortunately, you have this control of the screen.
Do you see the slide, Sarah?
No, I don't. I just see the very front page, the cover page.
Okay. Does everybody else see the agenda slide? I just want to make sure if it's across the board. Okay, give me 1 second here. Share. How about now?
Yes, perfect. So as I said, chime in, start chatting with us if you have any questions. So we're gonna generally follow this agenda, go through the first few sections very quickly. It's an overview of certain things, and really spend most of our time on investor deck. What should be included in there? What other investors are looking for in this deck? So that's where we're gonna spend a bulk of our time today. So we'll go right through definition of a growth in later stage. And how I define it, so you are in growth in later stage, running growth in later stage companies right now. And that means you have progressed beyond early stage, which is generally characterized as an idea, a concept stage, and pre-revenue phase. So now you have validated your product and services, and you have target market that's defined. So it's really, you have now revenue and generating cash flow, or at or near generating positive cash flow, because you're in a high growth phase of your business. So you're probably spending a lot of money. You internally generated cash back into, invest back into the company to really fuel the growth. So we don't expect high growth companies at your stage to have huge cash flow. In fact, here you are putting together this messaging, this deck, to raise more capital. So this kind of high growth later stage companies attract very attractive investors. But to be clear, companies, investors do not want companies that need this capital to survive, but really this require this expansion capital to reach the next phase of growth. So examples will be, you need to hire more people, you need to upgrade your platform, you need to extend, you like to expand your product offering, you want to expand your geographic reach. So these are some examples, because we need money to build marketing. You know, you really want to run a marketing campaign, and you need to just demonstrate later on, when you want certain amount of capital, well, how that's going to use. It's just the growth equity that you're looking for. So next slide would be, so this is a brief overview. You guys are familiar with the venture capital and private equity. I'll spend a few minutes on it, not even. So venture capital, as you know, they fund and mentor startup companies or early stage companies. And at the fund level, venture capital firms tend to have high loss ratios, which means if you have a portfolio of companies, 10 companies, maybe large number of those companies, may not generate positive return, but there are a few outsized return portfolio companies. So I'll use a baseball analogy that one home run investment can generate outsized return for the firm, the fund in general. So this high return potential is what attracts venture capital to take higher risk. Private equity, so that's where my expertise comes from. We invest in later stage companies, more mature companies, but there are two distinctions. There's a growth equity fund. They really look for companies and look to invest and have a minority ownership in the company. So these are fast growing company. They need not only growth capital to get to the next phase, but also strategic resources. So, so because it's a minority investment by this private equity firm, the owners, the current owners, control and retain majority ownership. But it is not untypical to have a board presence by this growth equity fund. So they will have either, however structure you, they might have a voting right, or they could just be an observer on the board. And the buyout fund, on the other hand, is that they invest in more mature companies, stable profits and revenues. They're now looking for double-digit growth on the revenue on top line. So they often use leveraged debt to really achieve their target return. So sometimes they use excessive debt, and they can get in trouble when the market, goes into challenging period. So that's just a quick difference in growth equity and buyout. Okay, so why is the investor deck so important? I think for all of you guys, it's going to be it's not easy, since you have founded company and did so much to grow the company to where it is, and position the company grow even further. So much you've done. You're like, how do I put this into 20-page deck? Because you want to share everything, your journey. So that's the kind of challenging part. That's where I'm going to come in to help you. So it's a highly effective tool to really demonstrate what you have done, your value proposition, your company's value proposition, and how the services and products solve problems or provide solutions for your end customers. And then chance to talk about your business model. And it's also chance to talk about your strategic planning going forward, and growth opportunities. And management's track record and proven really ability to execute upon strategy. And then those, the last bullet, and I can't emphasize enough, when you send this deck that you prepare, or set up a meeting, please spend some time. It's critically important to know your investors, who they are, because they all have a different sort of focus. So they tend to be growth equity investor or buyout funds. And are they a generalist, which means they don't have a sector expertise. They invest in vastly broad industries. In that case, you might have a little bit more, spend more time and a couple more slides in your industry overview section, because it'll be very helpful to them and educate them while you kind of articulate your knowledge base and your domain expertise in this sector so you're targeting. So I would definitely do some research on who they are before you send, and you have to then tailor your deck a little bit, but your foundation deck shouldn't be too much more work. And then for investors, investors see so many hundreds of decks a week. So a really good, well-prepared, well-thought-out pitch will really help them, because and they have all the information as investors want to know in the deck. And it'll answer all their initial due diligence questions. And it helps them because they have a limited bandwidth. And so it helps them evaluate whether this investment opportunity is worthwhile to pursue. And lastly, just longer deck doesn't necessarily mean it's better. I think there are fewer slides in your deck when you're done that's gonna really make a difference for that investor to make a decision to pursue these opportunities further. And so next slide is, so we're gonna dive right into what should be in the deck. So these are the sort of minimum required information that investors would like to see. So some of it's very obvious. That the first will be, ask your questions. Who am I and what am I? What do we do? What does my company do? And then kind of it's go through your sort of historical background. This always helps. When and how and why decide to form this business and grow, and then you were successful to grow to where it is today. And then obviously product and services, and you have to really explain depending on what your products are. If you're in retail business to B2C consumer and selling shoes, that's much easier than you selling software as a service, SaaS businesses, or platform such as revenue cycle, billing cycle platform. So that requires a little bit of explaining. And then also here briefly talk about who your target customers are. It could be consumers like you and me, or it could be private business, and it could be government. It could be all three. But it's important to sort of highlight who you are and which sector you like and you're gonna invest in to grow even more. So that will kind of come into play when you kind of summarize your financial statements on the revenue side. If you have a different distinct target market, it's good to sort of segment it and break it down, the revenue. And then, so it's really important. Everybody want to know like the stickiness of your business. So how are these products and services that you created, you developed, help solve problems for your end clients and improve their efficiencies, and if it's individuals, their well-being, and even better, communities. So these are something that you should think about and put it into some narrative form and the bullet points. So something we can coach you in probably another session. So the next one is just kind of furthering down what should be included in the deck. And this is I'm on the next page now. So this is the kind of graphics I like personally. So this, if you founded a company 5 years ago, you kind of want to like graphically describe all the milestones that you have achieved. So these are, so it could be, I'm just giving you examples. You founded a company in 2010, and then you first product launch, and first customers with over $100,000 revenue, whatever the numbers, those important milestones. First hiring of sales director, first then we achieve positive cash flow if that's the case. Now we are at today where we are, number of customers, revenues, and what you look forward to from building on from where you are today. So I think this graphically sort of, it's always helpful. I find it. And then market and industry trends. These are a very important part of it, and it takes some time and research. So what is your target market, depending on your business? So you could start globally, like broadly. So let's say you want to sell, I don't know, devices to, or software platform to doctor's office. I'm just picking that up as an example, or urgent care facility, whatever. Then you can kind of start with the healthcare industry being hundreds of $billions, but you're really focusing on small independent doctor's office or urgent care. Then you have to kind of drill down to what the market size of that is. And from there, you need to understand the spend they're spending on your products. So whether it's, I don't know, it could be cleaning service, it could be software or SaaS platform. So you need to kind of drill down, what is the expected market size for that, and market trends, how fast has it been growing in 3 to 5 years, and then project that 2 to 3 years. There are ways to research this, but it takes a little bit of work to present a thoughtful market size analysis. So, and then another thing is, if you're only going to focus in the Philadelphia area, for example, then there is you're directly addressable, we call it addressable market size, is that segment. So, and then you figure out what's my market share going to be based on what you know your product offering. So say that market size, you drill down to your addressable market is $50 million. If you have 5% market share of that, you can project that $2.5 million of revenue. So this is sort of important to sort of highlight this market and industry trends for the investors, because they're really valuing your company for what you have achieved or how well you're positioned to grow the business. So this market trend is very important. I'm just gonna pause to see if anybody has questions. If not, we're gonna go talk about growth opportunities. They want to hear about this. So you want to highlight at least 3 to 5 growth opportunities clearly defined. So now that you talked about your company history, product and services, your market dynamics, now you have to put it all together. And this is the growth opportunity. This is going to get us from $100,000 revenue or $500,000 revenue, whatever it is today, to $2.5 million at next 2 years or 5. And this is what we're going to do. This is what we identified. So these are just examples. Every business is different. But so examples of it, there is a general market demand. And since you're participating, you're targeting that fast growing market. That just naturally means you're going to grow with them, with those industries. And then you have a plan to expand product offerings, because you know that your clients want, your customers want this other features or other additional offerings. And then opportunity to upsell. So you keep your existing customers, and then you look for opportunity to upsell by either selling more features or more product, but also improve pricing structure. Another thing would be geographic expansion. We talked about that's the easier one. You just want to edge out from your core market, but relatively modest incremental expense, because you're just edging out. You're not going from Philadelphia to LA. And then you think about market share and expansion. So and then distribution channel partners, some things that you can discuss. If you're already you can partner up with other partners who actually has access to your client profile, selling other products. You can join venture with them. So you can kind of sell alongside that established distribution channel. So these are the kinds of opportunities you want to lay out. And that's going to, you have to just go through all this. Investors want to know what are the opportunities, and that's going to be reflected in your projection model.
So Sarah, I do want to pause here real quick. I do want to ask the audience,
Mhm.
are you guys relatively comfortable? Do you already have your target market kind of identified, the addressable spend identified? I just want to get a sense if you want to chat it or even come off of mute and just say yes or no, so that we could get a sense for that. That would be great. Okay.
Yeah, so that's like an example would be if you want to have services, let's say repair service for your phones and electric devices, right? But you want to really focus on high school students. So then you might want to like think about that kind of segment, or you want to really focus on elderly population who just don't know how to fix things. Then you might want to think about how you're going to distribute that service. You'll be probably calling on some of the places that cater to elder generation. So these are that's how you kind of identify your target market.
And Sarah, do you have any recommendations of public resources that would have information on market trends, industry
Yes.
trends?
Yeah, so I think a good place would be, there are so many of this, what you can probably think of it as brokers or investment banks who focus on certain sectors. So there is, so if you sort of Google, that's a great thing about this technology we have, with you Google on industry stats on selling, repairing electronic device, or something like that, and it'll give you a lot of options, and you're going to have to spend some time to. I don't have a specific. It's really industry driven, Fuzzy.
Yep.
Yeah.
And yeah, like Sarah said, I've done some research around different industries. You can usually find a lot of market trends out there. Now, if you want the detailed, down to the nitty gritty report, there might be a cost to it, but some of the high level information around growth projections, kind of the compounded annual growth rate over the years, things like that, that might be somewhat publicly available.
Yeah.
One example is IBIS World that I've seen out there, that has the kind of global information. Again, you want to cross-check a few resources to see if does it align. Is there a huge disparity amongst the different data points? But if it's generally in alignment, you can be pretty comfortable, that you have multiple resources saying directionally the similar things. It's probably reliable enough.
Yeah, and I think that I assume you are, or you will be very shortly. Just start to, people are going to kind of reverse inquiry, submit a reverse inquiry. We are interested in learning about your business because we're an investment banking focused on these industries. I think you have a great business to try to help you sell the business and raise funds. So those guys are a really good resource to get like industry information, market information. All right, so we talked about customers, and this is more the drilling down that you can integrate this into conversation about how you're going to grow the business. So I'm going to just highlight a couple things. It's kind of try to dissect your customer profile as to how many customers do you have and how much revenue per customer. Is customer A, generates $100,000 or $100 a month or whatever it is. You kind of want to have that information because they want to know, especially the top 5 customers. And then they also want to, investors also want to know, is this a one-time purchase or is this a repeat, a sticky business? So if you can gather or give us some examples of a purchase history, it's hard to get that from the consumer is your target. If you have an online buying, that you can get that information if they go back and buy the same product again. And they want to know the customer loyalty part, the stickiness of this revenue. And sorry? Oh. And then if this is customer concentration, something unfortunately or fortunately really has to be included in the deck, in my view, because if you don't, they're going to ask anyway. So list out top 5 customers today. Again, it's hard for the consumers, but you can kind of segment it by their characteristic. Are the students, it's a female, it's an age group 50 and over. So you can just sort of analyze that way. So customer concentration is extremely important to investors. So if this is applicable to your business, what I mean by customer concentration is, you don't want to have the largest customer representing 50% of your revenue. If they do great, it's a good thing. But if something happens to that customer, then 50% of your revenue is just gone next day. So investors always want to know if there is some customer concentration, that you have a plan to diversify. And that's sort of so it's that that presents a potential risk, and we have already thought through ways to manage that risk. So, I mean, I'm going to skip to the pipeline of prospects, the last bullet point. That's actually a good way to sort of show the integrity in your system and how much you are looking to increase your customer base. So it's a pipeline of prospects. So on a no-name basis, you can list out customer ABC or whatever, and just say these, if we win this, we can probably generate $50,000 a year for this kind of customers, because you've been doing a lot of market outreach. So you have this good market information, identify these prospects. And then table form is always good. And then you have this customers, list out the customers, and then you put, their expected revenue, annual revenue. And then next to it, you can put something like probability of winning. So if you think bottom of the list is particular prospect, you probably have 50-50 chance of winning that business. Then put 50% and multiply by the revenue. And then you get this last column is what we call it probably weighted revenue. And this kind of shows also kind of address your customer concentration issue. So that's something that investors are going to definitely want you to answer and walk them through if there is a significant concentration. And recurring revenue, it's just so attractive to investors, because if you have a recurring revenues, it's different than repeat. Recurring revenues is actually contractual. So it's a subscription base. If I want to buy Food and Wine magazine for a year, I have a subscription that I have to pay every month. Also, another example will be you have a government contract that runs, it's a legal contract. So you know that what the remaining life of the contract is, a 2-year contract. And then you have to sort of identify what the dollar value of that total contract. And since if you have serviced them already for one part of half of the year, then you need to be able to articulate what's the remaining contract revenues. I hope this is not too confusing, but it's pretty much for investors to understand we have a customer base that's recurring, that's repeat, that's loyal, and we have a pipeline of prospects that will help us diversify customer concentration. Does that make sense? But this is the kind of slide that really should be included. And we talked about competition. So this is competition. I sometimes see they don't even have the competition slide, but I think it's important to have it. Sometimes they say we don't have any competitors. I don't think you want to put that in the deck, but so what's the competitive landscape? How do you differentiate your product and services? And what's the barriers to entry? These are the things. Barriers to entry, obviously means, my neighbor can replicate my business model and start taking my market share away from me. So these are the kind of things you want to be able to articulate to that. And the example of your competitive advantages, you have to list out your competitive advantages. It could be a broader product suite. It's a flexible solution that you can provide. It's a one-stop shop. So your clients don't have to go to 2-3 different places. And flexible offering. It's and also very important to have a strong customer service and like help desk type of thing. The customers get strong support from the team, and you have an infrastructure to really help them in customer service. And obviously track record of the market. If you're gonna focus on certain segment of a geography, your reputation, your track record is gonna be heard. It's gonna be used as a referral. Word of mouth is a powerful marketing tool. So that really distinguishes you from other competitors who have done poor job building track record and reputation. So in this slide, or maybe 2 slides, you want to include 3 to 5 competitors, direct competitors. And so if you can, you should list them out, 3 to 5, and then add a column next to it. What are their strengths and weaknesses, and what are your strengths and weaknesses? And it's okay to say you have weaknesses because they represent opportunities, right? So, and it just ties to your capital needs too later on when we talk about capital raising, because we know what weaknesses are. It's good to know. So we're going to spend money to strengthen that and strengthen your market position.
Sarah, 2
Yeah.
questions. One is, in the scenario where where we're thinking we don't have competitors, and really what we're meaning is we don't have direct competitors. There's not somebody out there who's doing exactly or extremely close to what we're doing, but there might be some part of it that they're doing. How would you describe them? Are they indirect competitors? Or like, how do you present?
Yeah, so you probably have seen this product suite thing, so you can describe some competitors and what services they offer and they don't, right? So certain segments of what they do, not the whole company per se, but certain things they do are direct competitors. So you could say, we don't have a direct competitor, but we have this other company who does sell or provide these services and products as part of their product solutions. So you can list them, but just asterisks and making sure that it's just it's not their full focus. It's just one of their little product.
Which helps your competitive advantage.
Exactly.
Right? Yeah, it's better than not somebody on the list.
And another thing about doing some analysis on who's going to be my competitor, who's my competitor today, who might become my competitors tomorrow. Yeah. It's really important because these competitors actually could be your buyer one day if they're bigger companies. So this market knowledge is important on many aspects. It's to be defensive, but also offensive too. There could be companies that are out there trying to do what you do, and maybe there's an acquisition opportunities for them. So be in the know of what's going on and understand the competitive landscape.
That was actually my second question.
Yeah. Okay, so all these things take some thoughts and times, but I do know these questions that I would ask when companies, entrepreneurs come to raise fund from us, knowing the understand the competitive challenges and advantages. Okay, the next slide is how are we doing with time? Okay, so next slide is a financial summary. I think most of you guys probably have plans, financial plans or projections. So it's important to include the 3 to 5 year, 3 year, no 5 year, historical financial outcome. And then also include a slide that shows projection for the next 3 to 5 years. And it would be very helpful to just highlight key assumptions. Why are you projecting your company's going to grow 30% next year? It could be the pipeline of deals. It could be product extension. It could be geographic expansion. So you should really think about why you're projecting 30% growth. I'm just picking 30%, but so think about bullet points or ready to prepare to answer that. And then summary of balance sheet as of today. So that's just really simple. Do you have any debt and the capital structure? So metrics to include in those different set of financials is revenues, obviously. And like I said earlier, if you can break it down, because it provides some insights around how you're going to grow a different segment of your revenues, whether it's product or target market. And then gross profit, what is in gross profit margin? It's a direct cost to generate that revenue. And the next one is operating expense. And I think you should think about and be prepared to answer how much of our operating expense is fixed or variable expenses. Because if you have a huge fixed cost, that means if your revenue somehow weakens, then your profit is going to evaporate, or your margin is going to be significantly impacted, because you still have to pay rent, you still have to pay facilities, you have to. So these are the kind of variables and fixed operating expense they want to know. So you don't have to like break it out, but just think about it and just prepare to answer. Roughly 40% is fixed, everything is variable, so you can scale. And EBITDA, I don't know why I put an asterisk. EBITDA, you hear this metrics all the time. So it stands for earnings before income, tax, and depreciation and appreciation, amortization. Sorry. So you know this, but you should really understand what this measures, why this is often used to value your company, and among a lot of things, these metrics are used. So it is really a P&L item, but excluding non-cash expenses, so depreciation, appreciation. And why do they exclude interest? Because they want to also use this metrics to see if you have debt, do you have enough cash flow to service and pay interest and principal and service the obligations under that debt agreement. So it gets used in different ways. So, and then you've heard multiple of EBITDA, depending on your industries, they often use number. And then you can use it as a rolling 12 months EBITDA. And if it is recurring, you can just multiply 12 times by today monthly subscription. So it's not really rolling, but it's really contract basis, so subscription based. So you can actually pro forma the actually expected recurring revenues. So then they say, okay, your business, your type of business and your type of market, it should be, your valuation should be, 3 times EBITDA. So if you generate 1 million EBITDA, business worth 3 million. So it depends on the business. And CapEx is a capital expenditure. And investors, I want to know if your CapEx is discretionary or non-discretionary. So, obviously, if discretionary is better because it's more flexible, you don't have to spend it if you're a cash strapped. But if it's discretionary, you need to have this facility, you have to these machines and upgrade these machines to produce your goods. You need to really understand, because suddenly EBITDA is 1 million, but you require CapEx is 1 million, then you have cash position of 0. So you need to sort of think about what is discretionary and what's non-discretionary. And
Sarah,
yeah,
I'm going to ask you to define that a little bit. Can you give some examples of what falls in a CapEx bucket?
Okay.
And then what do you mean by discretionary versus
Okay. So you are manufacturing, because I was talking to somebody who did manufacture beverages, and so then you need to have the machinery to really produce the goods and process it, right? So you need to buy the machine to produce those goods. You have no choice, right? So that's not discretionary, it's non-discretionary. And let's see, so what's non-discretionary? So then it's a, you know what, I want to make this product move faster. So what do you have? You want to buy some trucks or something, and that you can actually deliver the goods instead of relying upon outsourced distribution channel. So, but you don't have to, but that would just help you or working capital better and deliver the service better. So does that make sense? The print press, you have to have it if you're a newspaper company, not that it matters these days. So those are like heavy equipment or facilities, factories. So those are sort of CapEx that you have to, and sometimes if you have equipment, you have to constantly upgrade that. You have no choice, you have to do that. So that's not discretionary spending.
Great, thank you.
Okay, then the management team, this sounds like a really, really straightforward, and it could be short slides, it could be long, but just a couple things I just want to call out. Right now at this stage, you might not have an org chart, but you might have an org chart in mind that might look like in 6 months. So it's okay to kind of think about it. There's a CEO, there's a CTO, and there's a sales VP of sales, but they're right now empty, or you're outsourcing them. So think about it. Even if you're not going to include those charts, think about what you need and what you currently have. So you would include, like, the key executive members of the company. So I just named, just example, CEO, CFO, if you have it, sales director, chief technology officer, if you have it. These are the kind of companies, so you have their bio, so you've seen that. And some, most people have actually the headshots of this, individuals. And then it includes not only their experience, just sometimes it gives a perspective on how many years of experience they had, and how many years actually they've worked together. And then individual, the contribution of these team members to organization to where it is today. And you can kind of go back to the timetable milestone slide. And that milestone that was achieved, and it was really because of this person's contribution. One thing I want to just highlight is that there is going to be higher needs. So while you can't show that they're your employees right now, you're currently outsourcing that functionality. So it's okay to, you can include those consultants or outsource sales staff, so long as you get their okay, since they're not your employees. So just make sure that you get their approval to include them as a team member. But you have to kind of say they're not a full-time employees, but they could become a future full-time employees too. And hiring needs will come up. It's really important to talk about it. If we had capital, I would hire one more sales director, or one more, I don't know, two more sales marketing people. So then you can discuss this in the next slide, which is going over funding needs and how the proceeds that you raise are going to be used. And advisors and board members, I think it's really helpful, because they probably have a very good domain expertise in certain areas that really is critical to your growth. So I think that's important. But you should also just check. Board of directors is different, but advisors, you might want to just check with them.
Sarah, we have a question in the chat. And the company is from Michael. The company I work for has been around for over 30 years and has had consistent earnings during that time. However, they want to grow and expand their target market. Will their years of existence be a plus or minus? I'm assuming in terms of an investor lens. So.
Yeah. So I think if the 3 decades of a track record is a great thing. So you probably didn't invest into the company, but you have established market. Now you really want to take that business to the next level by identify what that is. We have the established revenue, customer base. We just need to bring more product to sell to them. So you have to have, so I think it's a plus, but it does show that why didn't you do this sooner, right? So there could be answers for that. A lot of family-owned businesses, they're so busy. They're just bandwidth is so limited, just trying to do what they do and maintain the business. And so there could be, it's not uncommon that they just don't have bandwidth to go and develop and expand and focus on certain market expansion. So I think it's a good thing. And I think it's really, if you have a less proven track record, there is a risk of not being able to execute that. So I think that the decades of track record is a good thing.
Great, thank you.
Mm-hmm. Okay, so I think that if you already have advisors, and I think I would definitely include them. So capital needs. So now you're saying you are talking to your investors with this deck, and then this is a slide they want to hear about. What do you need, and why do you need it, and what if I give you that, how are you going to use it, and what is that going to? What's the RO, return on investment, on this expense? These are just examples I listed. Most people want to say, I wish I had more marketing fund dollars, so I can hire more people, or I can really do this more of the focused marketing campaign that generates a higher conversion rate to acquire customers. Technology, it's something that, if it's a software company, you really want to add features so that it becomes more robust product offering. Salespeople, like I want to hire 3 more salespeople to knock on doors, and this is going to generate this much. So every one of this items, or there could be other ones that's unique to you, just explain you've already identified people, marketing tools that's going to generate this type of growth, help us generate this type of growth. So think about, instead of just saying, if you give me $1 million, I'm going to use this, that, not. It's just, if you can articulate more, because they want to know, really, have you identified the technology you need? Did you identify talent pool to hire these people right away? Because if the money is given to you, they want it to be utilized right away, because it's going to help you growth and it's going to help their return. Does that make sense?
Any questions on this in terms of how this should be presented? Is there a tool
I'm sorry?
used to find investors to pitch to? I think that is something that we can work on together, John and team. I actually do have access to some tools to identify investors, but obviously the connection and introductions to them has to align with with kind of what you're looking for, what the investors' criteria is, and also just knowing what kind of package do you really want to position with them. So that's definitely a one-on-one conversation we should have post this.
Yeah. And someone asked me, and I think next slide, I think addresses that. What, and have you, since you've seen so many different decks, there are certain decks that have certain elements you thought, it's kind of interesting. It's kind of, characterized as differentiator. I personally like case studies, so you can think of case study in many different ways, but it could just be that one major customer that really was a significant milestone. How did you describe the whole process of how'd you get that? How'd you win that customer a contract? And so that investor says that this is a repeatable process. You have the team has a strength to do this again and again. So that case study is I find it very helpful. Another thing is sometimes they have this if it's kind of complicated services, so technology platform, whatnot, that helps the companies really improve their efficiencies in business, is they have links to this product demo. Sometimes they go through it for like, literally 5 minutes and kind of walk through what the demo, like your customers would. I found that helpful. And if you could, and this is going to be hard and takes time, if you might just kind of add, if you could just say, have enough information to just include some M&A transactions in the sector. So these are the kinds of companies that are comparable to us in size and what we do. Or it could be bigger companies that traded. In other words, they got sold. And so they can generate some interest from an investor's perspective. Oh, this is kind of an active M&A market for this type of industry, this kind of service providers or product providers. And so then you can start thinking about your exit strategy, which means, how am I going to sell or raise next round of money? Because the real exit strategy is just selling the company. Obviously, if you get scale, get bigger, it could be acquired by your competitors or strategic buyers, or it could be IPO. So there are lots of a SPAC now. That's a big distribution of monetization tool. So I find that a little bit interesting, but doesn't really deserve to be inside the core deck. And then if you have so much information you want to share with, and I can just see that, feel that pain, like I want to include that, all that stuff that you really think is going to be important, helpful. You can all put that into appendix slides. And if they ask, so you should go, then you can kind of freely go to that page and go through some additional information.
All right, so let me kind of walk through a couple of tools and resources For those of you who do not have a deck yet, we do have an investment brief template that we can provide to you. It really has the core sections of what was covered today, and it'll help you get started on kind of developing the content. And then we can help you translate that over time into an investor deck. Now, your investor deck, you probably want to have your branding, your logos, kind of that kind of color scheme in there, some unique graphics that are specific to your business. So that's why we don't want to just give you a canned pitch deck, which you can find online on SlideBean and different places. But this is the core tenets that you want to come up with the meat of what you want to put into your deck. And then we can translate it in terms of the formatting at a later time. So you do have this. If you are, if you can go ahead and mute your lines, that'd be great. So the other thing that I will be hosting is just working sessions to really work through these sections with you. If you wanted to dive into that, we can do that. I will be emailing those working sessions out. They will be smaller groups, probably, more like 5 to 10 businesses on the line. And then we can kind of dive into that piece as well. Let's see, we have a question. Would it be better to create a recorded deck with voice to pitch investors virtually, or no sound and let them read it themselves? Sarah, have you seen any of that? Yeah.
I think with this pandemic, people are so accustomed to it's Zoom call so easier. Before it was a lot of expense and time to go visit these investors to pitch them. So I think that you give them you first of all, you give them the deck, but I think that you should at the same time to have a Zoom sort of a calls, whether it's Zoom call or MS Team. So it's become so much more efficient now to pitch to investors, and it's expected that you do it virtually.
Now, do you see any benefit for a recorded version, or I'm not used to seeing that? But
me neither, actually.
Yeah,
I haven't seen it. That's an interesting idea. I'd love to sort of test that out.
Yeah.
But if it's recorded, recorded is better than, I'm just thinking out loud. Recorded is better than the reading materials that they will read, right? But recording is not, it's one way. So recording is also, it's not as good as the Zoom call. So I would just try to, but it's a really interesting idea.
Yeah, it's a very interesting idea. If there's, you
I actually like it.
You might want to ask your investor actually.
Yeah.
And see, would they be open to getting a recorded version? Would that be appealing to them? Because that might be a good gauge to say, are they going to actually engage with that well, or are they not going to respond to that well? So it might be worth testing, maybe having it ready before you ask, but see if they would be open to it. But I think it's worth a try.
Definitely, it's intriguing. I haven't personally have seen like deck that's being recorded.
But that's where you want to really get your pitch strong and fine-tuned. If you're going to do a recording, it can't be, like everybody says, investors have a very short bandwidth for listening to your content. They're kind of looking for some key things. So you want to really kind of fine-tune that pitch and really hit home with some of your key points on that deck.
Yeah, I think, John, that could be potential drawback because it takes longer to listen than go through your deck at your own pace. So talk about their bandwidth and resources, that could be a drawback.
So maybe it's kind of a summary statement on some of if it's a short snippet of a piece, I think it could be helpful. So worth the try. But yeah, also just get some feedback from some of your investors.
Yeah, me too. Yeah. John, to everyone, it says there are tools used to find investors to pitch to.
We address that, yeah.
Okay. Thank you.
So those are some tools and resources. I wanted to make sure that you guys are on the lookout for that. I will email out this template to the audience that attended or registered for this session, so that you have that. You will see follow-up emails with the recording of the session, as well as the ability to register for some of those working sessions to kind of go through these investment brief templates section by section, and maybe even trying to help you address, how would you begin to fill it out if you want some help that way. Lastly, in terms of engaging with our one-on-one services, I mentioned some of you may have jumped on maybe after our initial introduction. We do have one, if you are looking for equity financing and you want to engage with kind of developing your investor package or vetting your investor package and being prepared with your pitch, we do have consultants that are working with our businesses one-on-one doing that. So in order for you to engage with that one-on-one service, we do need you to complete the intake form. It gives us a good baseline on where you are and how we need to be working with you, with each of the consultants. So if you can go ahead, our intake form is on our website, but I've also put in the link into the presentation. But I'm gonna share our website information with you here. Give me 1 second, and I'll put that in the chat. So if you could go to our website, our webpage, there is a button called the intake form up top on the right. So that's one way of getting at it. The second way is I'll just give you the direct link as well. So that's our webpage. There's also recordings from prior sessions on there. There are other resource links on there, like Investopedia is a great resource that just defines a lot of these terms. So if you're just wondering what some terms mean, that's available for you there. There's some other resources like Slidebean is a good resource that gives you on YouTube, that gives you some baseline information around the equity and private market space. So different tools out there for you to check out. And then lastly, if you have any questions, please don't hesitate to reach out to me directly at this email address. It is emp@theenterprisecenter.com. Okay, so I'm gonna put that in there as well. Any final questions? I know we're a little bit over, but if there's anything pressing, I want to make sure we capture it. All right. Sarah, thank you so much for your time and covering this material. Really appreciate it. And I hope some of these businesses get a chance to work with you one-on-one.
Yes, I'm looking forward to it. Looking forward to a chance to meet you guys and help you. Great.
Thanks, everyone.
Thank you.
Have a good evening. See ya.
Yeah.